The European Central Bank has announced it's cutting interest rates by 0.25%. That follows a fall in inflation, which has put pressure on the ECB to reduce rates in order to stimulate economic growth in the Eurozone. This latest cut takes the main interest rate down to 3.5%. And for more on that, I'm now joined by DW business reporter Chipona Chimbelo. Chipona, just in general terms, what does this rate cut mean?
Well, it essentially means that the ECB's medicine of trying to get inflation down is working. And that is something that Lagarde also mentioned while speaking just minutes ago. Basically, the ECB has had high interest rates to cut down record inflation levels. And just to give you a sense of how far down the inflation is, last month, it was down to 2.2%. And in October of 2022, it was at 10.6%.
That's significant.
Exactly. So I think even consumers may be noticing that prices are not rising as fast as they were 2 years ago. But of course, for most of us, the pain is still there because, of course, our money is just not worth what it was a couple of years ago.
Now, how will this affect the economy in the Eurozone?
Well, in terms of the economy, it's all about borrowing. So borrowing has been, of course, extremely expensive. So businesses and consumers have been hit. And that is something, of course, that Lagarde also talked about. And that is the reason why also the economic growth, the recovery in the EU has actually slowed down. In fact, the Eurozone economy is projected to grow only 0.8% this year. And that is probably also in part due to the high interest rate levels we've had, making, of course, borrowing extremely expensive for businesses, in turn, of course, slowing down their investment efforts, and then, of course, affecting consumers as well, who then, of course, have spent less. So all of that has had a ripple effect on the economy, and this is why the Eurozone economy has slowed down quite significantly.
Yeah, it really puts the brakes on things. How does this EU rate environment compare to the US at the moment? Well,
it looks like the United States, the Fed, the US Fed, which is the US Central Bank, is set to lower rates by potentially 25 basis points, so 0.25% next week as well, which will bring down borrowing from where it is to 5% to 5.5% in the US. That is the expectation, so that will likely happen next week on Wednesday. However, if the US Fed did surprise us and actually lower the interest rate by 0.5 percentage point, that would, of course, have, sort of surprise ECB policymakers, and they would probably lower rates in October instead of December, as is expected by market analysts. So, of course, we'll be watching very closely to look at what's happening in the US, because, of course, what's happening in the US also affects the value of the euro, which in turn is going to affect exports. So how expensive are European products on the global level? And that, of course, is something that they'll be looking at very carefully. So everybody's sort of being kept on their toes with interest cuts and interest rates.
It remains interesting. Thank you very much. Chipona Chimbelo, DW Business.